Hey, it's Mack with PriceActionTradingSystem.com. It is Thursday. It's March 31st. This will be our chart lesson for today. This will be our last one for the week. We won't be back until Monday to do our next one, so no chart lesson on Friday. And today was really just a range day. Here's your overnight low. Here's your overnight high. And even though we got outside of that, we didn't get outside of it far, and the majority of the day was inside that overnight high and low, and you can see that across there. Um, there's also, this really was a spike in channel. There's a channel working up here, and if you saw this channel, that was the better play. At first, we're just going sideways, but it turns out there's a channel working up here. Had a break, I moved to a new high, followed by a double top, and then we sold off. Exactly what you'd expect to see. Um, really straightforward kind of trading day. Your shorter term stuff all tended to work out here as well. And fairly decent day. There were a good many trades in here. When you're swinging back, even though the trend is up here, if you get a good setup swinging, when you're swinging, notice how we're above the EMA blow, above a blow. That's, you can trade it both ways when it's like that for the most part. That's kind of a range day, and for a while it wasn't obvious that we weren't in just a flat range, but we really weren't. We were in this channel because you can see once we started hitting this trend line each time, prices bounce until we got the break here. And again, it's not a break, it's a close outside is the way it really should call it a break, but you're looking for a convincing close outside that trend line. A push through it doesn't really count. We need a convincing close outside of it. And we actually overshot it here, so you had to be careful here that we didn't get a break, but it actually took another push up and then down before we got the break. A lot of times these overshoots will lead to a fairly quick break. Once we started going higher here, I would look for a measured move. There's your first leg, and then there's where you're looking for your measured move from. Oops, don't know what I did there. And notice that we didn't get anywhere near that. And so when that happens generally and you start trending the other way, you're generally going to trend the other way pretty strongly. And you can see we sold off strongly here. Look how everything's below the EMA. That's a trend. We're trending down here. That's an obvious trend. Easy to find trend line early on. It only came back to it a couple of times, but they were both really good setups. So, and both of them, this one you would have got a runner, and this one as well here, you wouldn't have got as much out of it, but it still went several points. So, um, 3 points probably in there at least. So, but that's your clue. When you start trending the other direction, it's obvious we're going the other direction, and we didn't get anywhere near the target up here, and that means we're probably going strongly in the other direction, and we did. So, uh, let's let's back out. Talk about the actually I drew this arrow here. I wanted to remember to talk about that. So even though there's no trade there, I do want to talk about it because I can understand. Another trader sent me his chart and he was upset about this failure here. Want to know, he thought he did everything perfectly and right, and he still had a loser. And sometimes that happens. If he'd drawn his trend line like he should have, you'd have known not to go long right into that trend line. What this is, what they were doing here, and you don't know this at the time. I mean, that looks like a failed break lower. That's a fairly bullish. It didn't quite close on its high. It's a fairly large bar. So that's not a perfect setup. It is a second entry. Look at this high, pull back first entry, pull back second entry. So there's a second entry. It's a bullish bar. It's a bullish reversal type bar. It's not perfect. We're really starting to go sideways here. Look how the EMA is laid over by that time. Also, notice that there's a break here and a move to a new high. We've got two pretty much measured legs up. In fact, I think we went more than a measured move, so we're really overdone to the upside. You can see that there. So that's another possible clue. But the biggest clue is you got this trend line working down, and unless it's a really strong trend at the time, which it's not now, So yeah, it's anytime you got that trend line working down, if it's a real strong trend, I would say, hey, maybe go long there. But what I would say here, once it broke higher and it starts turning down like that, don't wait for it to stop you out. I know I tell you don't monkey with your trades, but that's a trap, and that's the whole idea. Most everybody, you're smart, even your smarter traders know that this is generally a very good entry here. And if you're not paying close attention and you're not really skilled at seeing all the aspects of it, you're going to be tempted to go long there. And I can understand why, because it was tempting for me as well. But if you draw that trend line, you don't even have a close outside that trend line, and that thing stops right dead at the trend line. That's your real clue. It didn't even push through. The last two bars, none of these closed through. The last two bars couldn't even push through. That's not a market that's about to. But it does look like they trapped everybody to the low side here. If they had of it, probably would have closed on its high, and it didn't. So that's another slight clue. Um, so they're just egging people to enter here, and when they do, they've got them trapped. And really, what they're trying to do is they're not only trying to trap some longs in. What they're trying to do is they're trying to trap out people by all the longs. If it goes past this point, that's kind of like the point of no return where the last of the longs are going to exit. And so they're really trying to run people out and maybe trap new shorts in so they can push it on up because they weren't able to push it up here. So you got to think about what they're trying to do. And it looked like that they had trapped a lot of shorts in, and they probably did trap a lot in. They scared them out here and caused it to push down in order to get the stops down here and run all the longs out. And that's probably what they probably ran a great many longs out right there, and then it reverses it. And it never really takes off strongly, even then. So I don't think they probably trapped a lot of people on the wrong side here. They probably just trapped a lot of people out. That's based on the way the price action looks. That would be the way I would describe it. So yeah, you got to be careful. You gotta let the correction play out. And you probably could have even looked at it like this, because there's a shorter term one there, and you get a break, and you get your move, but it's trying to make a new low, and it does make a new low there. So, but if you draw on that trend line like off those first two swings, by the time it got to here, you should have seen that trend line as well, because originally I'm looking at it like this one right here as well, coming down through there. And we do have a new low in place. So there's another reason that you might have been tempted to enter there. But anyway, that's enough time on that. But you just got to, the good thing about this one is that it's early in the morning. It's before the regular open. You got time to make it up if you get trapped and you get fooled there. That's the best I can tell you about that. But the real thing is you can't let it upset you. Sometimes we misread it and we get it wrong. But if you went long there, you misread it. You missed this trend line coming down. So notice that that your best long doesn't happen until you've got your break and you get two failures to go lower, then go long. And there's an easy scalp, and then it comes back and it tests that one more time and gives you another chance to enter off the previous support right there. So this is a failed second entry short that traps people. It's the first break of this trend line working up. So you're probably going to attempt to retest that high and maybe even make a new high. And it actually, right here, that's a double test of that high, and that's where I originally had this line. So actually, you could actually argue for a short in there. So if you wanted to go short there, I'm okay with that one. I didn't mark it originally because I was, the overall theme is up here, and we hadn't made a new high yet. So you got to be careful about going short at all at this point. But by that time, we've really tested these highs quite a few times, and so there's an argument to go long there. The only stipulation is you got to get in here where you got enough room to get out before you get to the last low, which is here. So you got to make sure there's 4 ticks in there. And you might even want 4 here, but this one's not as important because you got the trap up here. You just want to make sure where the strong support is, you got 4 ticks before you get to that, because you see it bounced right there again. And so now you got another chance to go long. It's bouncing off the low of the support. You got enough room to get out before up here. You might even this is not a great signal bar though, so you might let it break higher and then drop a limit order back in here a couple of ticks to get a little better entry to make sure you get out before here. And you could have. And it's tempting. There's actually a failed second entry short here, but it's right into that resistance. Would have probably worked, but I think you got to skip that one. And when you get up here, you're not that, even though you could almost, you actually, that's actually a failed break higher at this time. And it would have worked if you took it, but I don't like that signal bar. There's too big a chance it bounces here and tests that again, or maybe even goes higher looking for that measured move. But it ends up working. I'm not even going to give that one a green. I just think it's too risky. I don't like that signal bar at all. You want a signal bar that looks like that. And then of course you come down here and you bounce off this trend line and you can't get to this low right here, at least not right there. So now you got a double bottom, then you get a failed second entry short, and look at that bar release. But more than anything, look at that trend line working down. You get the close outside and you get a retest with a new low. Now you got the green light to go. Even then, this one doesn't take off. So you might have, let yourself get shaken out of that one. Hopefully not, but turns out, the odds are we're probably going back up here now after coming off this low. And if this channel holds, we're probably coming to this line. And look where we go to. We actually overshoot that line. So that's a failed second entry short, a bounce off support, a bounce off the trend line, reversal bar, break of a trend line with a retest with a new low. There's several reasons to like that one. But there's also a new low right here. So there's a first entry, pull back second entry, and it fails instantly and bounces right off the trend line, right off the EMA. Look how bullish that bar is. I don't think you want to go long right here. You could because it's a trap, but what I would do is wait on this bar, let it break higher, and drop me a limit order on back in here. And you could have gotten filled all the way, all the way back to right here, and then got a quick ride up. Actually, if you had been this bar, you could have gotten filled all the way back to within 1 tick off that low of this, because that just makes a double bottom, and then it goes higher. And I don't think you want to enter here. You're right back up here close to this last swing high and this resistance. So just let it play out now. You've got your break. If you just go 1 tick higher, you got a new high, which is what happened. Then it pulls back again. So I wouldn't have waited on that bar to enter here at all. Then it shoots up, and now you got a failed break higher off this last double top. And you're way away from the EMA. You've had your close outside this trend line, 2 legs up to a new high, a big bearish reversal bar right off, a little overshoot of that. That's the one you like. And if you catch that one, you get a runner. And where do you probably want to exit? 1 tick off this line or so. And so that's an easy trade. No thinking. It's all automatic. I love those trades. And that's the kind you like to catch. And then guess what? You try to go, you bounce off that first. It's tempting to go long right there, but you got to, I don't have it on here, but you got a trend line working down, and there's no break of it yet. So you're probably going to get a close outside and a retest attempt, even if it doesn't make it, just like right here. It couldn't make it because of the trend line, but it tries it first. And so if you go long right here, you got to ride this out, and you never know if it pushes through there and then closes inside, and you still don't get a close outside, but you got your retest of your low. So you can't risk it until this plays out. And then when you get this really bullish bar right here, I like entering on that second entry. It's a second entry counting off the high, second entry counting off the low. It's a nice bullish bar. It opens on its very low, closes on its very high. That's bullish. And this one actually there's no overlap. It's a gap there. It closes on its high and opens on its low, and it doesn't fill that little gap in there. And so you may not. What you have to do is when it starts higher, drop your limit order where it normally would go and see if it'll come back and fill you, and it did. And sometimes it will usually fill that gap, but if you tried to be conservative and get another tick or two, you got left out. And where does it find resistance? Right at that highs of that previous range, but it pushes on through because in the end this is a channel, and so you probably don't want to ride all that out. This is a double bot. There's a failed second entry short there, but look how neutral that is and stacked up. And then this is a double bottom, so you could count this as a failed second entry short. And but you're going long right into that resistance again. It worked, but it didn't really fool a lot of people. You can tell it didn't trap a lot of people, but they pushed it on higher. You just got to skip that. And then you did get a close and a new high, but you don't get a good setup up here either to go short. So wait and see if you get a second entry, and this thing just starts falling. You get a close outside, you get a nice bearish bar. There's still room to here, so I like entering on that one. Everything's under the EMA, and you can tell they trap some people there. People that don't know what's going on. They trapped them. Look at that bar, one bar, how big it is, and then it shoots down before it reverses. So now you got your close. This is a repeat pattern almost, except you get your close outside, move to a new low. All three of these are like repeat patterns. And you get a fairly bullish bar. Just go long above that one because you're probably at least coming back to the EMA, and then you're probably going to come back up here and make a new high. And that's exactly what it does. It only makes it by one tick, and then you get this double top, and look at that bearish bar. I actually... this line. There's a couple of ways you could have entered this one. If you want to be a little aggressive, notice those double bar matching highs and those closes right there. When it broke above that and turned and went right out the other side all in one bar, you can go short there with a stop. But if you didn't and you see this bar, look how bearish that is. And that double top after a break and a new high. This bar is so big though that you probably got to get a little better entry. So you could wait on it to break here and put your limit order back here where you would have put your stop originally, and it goes just enough to fill that and then drops on down. So that you could enter that one either way. I'm good with either way on that one. You could count this as a failed second entry long, but we're going sideways. Look at all the overlap. This couldn't even break below that bar, and it actually did, but it just skipped right over it, and then you got that trend line right there. So just wait and see if you don't get a true failed second entry long counting from that high, and you do. And look how bearish that bar is. Just go short right there. Even then, it pulls back and tests the trend line when it pushes through it and pulls back. It turns down again. If this would have been more bearish, I would have said add on here. If you weren't out, you probably were out, but if you weren't, you could add on. And if you weren't in yet, you could just jump in right here. But that bar just closed too neutral. The bottom ends up falling out of it. But you got to be smart and get in the better points, or you got to skip it. There's actually a little double bottom right across here, so there's another little breakout pullback short. But I don't think I'd go short there either. I mean, you're going short at the very low of the move, and even though it keeps going, most times it won't. It's going to pull back eventually. But you might have been thinking that we didn't get our measured move. Remember, our measured move was way up there, and this is a pretty strong trend, and it's falling right off that trend line until right here, and you get a break. This one's green. Notice you got your little correction, and you don't ever get a close outside with a retest. But this is a really, really strong trend, and you've also got some sideways stuff there. You see that little channel working sideways. My line's not real straight there. You can see that stuff working sideways there, and so it's a failed break out of that. It's even though you don't see it, there's a low here, one leg up, pull back, second leg up, and then it turns down. So there's a two-legged correction on a slightly lower chart. Yeah, there's a second entry short there. It's a failed break out of that little congestion area. It's turning down right off the trend line, right off the EMA. It's a really strong trend. This one's worth. This one's almost red. You could almost argue that one to be red, but there's still some reasons to be leery of it. It's not a perfect setup, in other words, because you got the trend line, and you don't have a perfect bearish bar, even though it's really bearish. So, but then look, you make a new low, pull back first entry, pull back second entry, right off the trend line. It's a breakout pullback test of, it came back to test that breakout area right there to the tick. Turns down off that. The trend line is very bearish, closes on its very low. Uh, I'd take that one, and I'd look for a measured move just like that leg right there. Hope that you're going to get it, and if you do, let the runners go, because this has been a strong trend, because you never know, it may go a lot further. And you see we get a perfect measured move there to the tick, and after your break, two perfect measured legs to a new low, and that down moves over. And I had this conversation with this guy today, again, going back to this trade over here, you got to let this correction play out. And you want to be sneaky and think sneakily, like right, and that's what he's doing. He's thinking sneakily. He thinks it's the perfect trade, and he gets snookered again. But that's what this is all about. You got to be smarter than the rest of the traders, and they're always trying to trip you up. If this was easy, everybody would be day traders, and nobody could make any money, because it'd be too. For every dime you make, somebody's got to lose that dime. So hopefully you understand that. So if nobody loses, nobody can make any money. And unfortunately, instead of 50% of the people losing and 50% of them winning, which is what happens on every trade, in the long run, 90%, I actually think it's probably higher than 90%. 90% plus of the traders get all the money from the other, or I'm sorry, 10% of the traders or less get all the money from the other 90% plus, because the rest of them are all just jacklegs out there doing crazy stuff. They don't have a clue what they're doing. They don't understand price action. They just see prices going down, they start trying to pick bottoms. They see prices going up, they start trying to pick tops. They buy up here when they say, I got to make sure I see it going up before I want to buy. They don't know how to buy. They don't understand that you got to buy on the correction, and you sell on the move up. And then in a downtrend, you sell on the correction and you buy on the move back up. This is people taking profits right here. That's why you got that little bounce. You had a huge move down, and you had some profit taken there. Wasn't a whole lot. Most of them realize, hey, there's more. We're going to get more out of this because it's the first close outside. And what happens here is a bunch of them come in and start buying it up. The people that don't know any better, that are trying to pick bottoms, and this is them exiting. A lot of them exit here. The smarter ones, the smarter dumb ones exit here, and the really dumb ones don't exit to here, right before it turns and goes exactly where they thought it was going to go. And I can remember back in the day, I'd probably sell right here, or I'd buy right here, and it'd start down. I'm like, dadgummit, I could have sworn it was going to bounce. Why didn't it bounce? And then I tried again right here, and it turns down again, and or either that or I hold on hoping that it turns back, and I end up losing twice as much because you get a perfect measured move. And then finally I decide, okay, the next chance I get, I'm going to sell. And guess what? It rallies up here. Look at that perfectly bearish reversal bar. And I say, all right, I'm not going to be dumb this time. And I sell right there. And what happens? It's going the other way. And you're like, dadgummit. And then you're so frustrated. You sell here, and you sell here, and you sell here, and you sell here, and you sell here. And you done lost 4 or 5 times in a row. And you say, well, I'm going to buy now. And you start buying this. And that's what happens to people. And I bet you some of you are probably sitting there thinking to yourself, boy, that sounds so familiar, because you've done the same identical thing. And it's sad, but that's what happens to people. And it's because they don't understand price action and prices. And, even once you understand this, it's hard enough. But until you understand it, you got to be really careful. And you got to, you just don't need to be trading live. And I had that conversation as well today with a trader. He sent me his thing. He says, I just discovered that by putting all this stuff on my chart and looking at my chart every day that I'm getting better. Well, obviously he said you should mention that to people, but obviously he maybe hadn't been watching the videos very long, but I think a lot of times people don't hear it. I say this all the time, is that trading alone will never make you a better trader. All the real work happens at the end of the day when you go back and study your trades. Just like right here, when this trade failed, this trader, he wanted to ask me what was wrong, which that's okay. I don't mind answering it. But the way I would do it, I'd sit there and look at it until I figured it out on my own. And then the next time it happens, I know better. And that's what you got to do to get better at this. If you just think you're going to trade every day and get experience trading and get better, you're destined to have you're already destined for a long journey in this business. You're not going to learn to trade in 6 months. You're not going to learn to trade in a year. I doubt most of you are going to learn to trade in 3 years. It takes a long, because you not only got to learn how to read the chart, then you got to get another long period of time of experience actually doing it. So this is not easy. And all these people come in here with these unreal expectations, and they're the donators is what I call them. They donate all the money to the people that make money. And without those donators, this business would dry up. So you need them, but at the same time, you just hate to see. I hate to see people come in and just lose their hard-earned money when they can't afford it. I hate to see people that can't afford it do it. And you won't get the real message very many places. And I'm not saying I'm some spectacular nice guy, but if you want to learn it, I'm telling you what you got to do. I'm not sugarcoating it for you. I'm never going to sugarcoat it. I'm never going to tell you, is it easy? Yeah, it's easy once you figure it out, but it takes a long, long time of hard work. And just sitting here trading every day is not hard work. And if you think you're going to sit here and trade every day and learn this business, I'm sorry. You're just going to be a donator. And, I don't mean that ugly. I'm just telling you like it is. Get off. Don't trade live until you can double a sim account. And I mean double it trading right. Put $5,000 in or $10,000 in a sim account, and when you can double it following the rules and trading right, and you know what I'm saying when I say that. Don't fool yourself. In other words, doubling down and and stuff and letting losing trades ride out and come back and all that stuff. You might get away with it on a simulator, but you're not going to get away with it trading live, because you're going to lose it with your real money and screw it up, and you're going to go broke. So when I say double sim account doing it right, that's what I mean. I think most of you understand that. So I did want to read one other thing here. Email I got today, this morning, and I know a lot of you like to hear success stories. I got this email from a trader. It says, I've noticed how well price action works. And this is a really important piece here. And I try to tell people this because I see a lot of people make this mistake. They try to box price action into our rules and follow the rules real strictly. And if you do that, you're not going to be successful. That's why we can't. If it was that easy, I could have had somebody write a program to do this a long time ago, and I'd never have to even come to the office. I'd just let my program make all my money. But you cannot write a program that can do all of the things you need to be able to do. And I know people think you can. I've never seen anybody can do it yet. We've been working on a program for 5 years. It does pretty good, but until the day it can out-trade me, I'm not interested in it. And to this day, it can't trade anywhere near as well. It's profitable, but it's too up and down. It's like a roller coaster ride. And so until it can do exactly what I can do, I'm not interested in it. And nobody should be, because eventually it may lose money. I won't use it because it can't trade as good as I can, and it can't do it as quickly as I can. But anyway, let me read the email. I'm getting off on a tangent here. I'm getting on my soapbox again. It says, I've noticed how well price action works, but It is not mechanical and takes common sense when it is not a perfect setup. I've been waiting for the verification and will put my order in not ever risking more than 6 ticks. So, people say, you can't do this with 8 ticks. It's not big enough. Well, this guy's doing it with 6 ticks. Sometimes that means I miss a couple of trades, but overall, it keeps my losses to an easy recovery. So he sent me actually a trade he took. He says, so this trade was right before the open. It was a two-legged move down, perfect trap, and an easy 4 ticks. Closed 2 minutes before open, or else I would have moved my stop to break even. And I believe, if I'm not mistaken, he took this trade right here. So he was patient and saw the short trap. I'm going to pause this. Okay, I'm confused here. I went to go hit my pause and I was already paused. So I don't think I showed you his second chart. Uh, just in case, I'll go over it real quickly again. And if I'm repeating myself, I'm sorry. I got confused there somehow. But anyway, he took this short right here. He sent me a second email and says, hey, first he said he was going to be done with 8 trades, and then he says now 9 winning trades. He's got 9 winning trades in a row. He went short right there. And again, his chart looked even better than mine. Even that's a pretty nice setup on my chart. But I went on to say is that you don't get 8 or 9 winning trades in a row on luck. That doesn't happen. In fact, there's probably 99.9% chance that you would have 8 or 9 losing trades in a row versus 9 winning trades in a row based on luck. Because you just don't get lucky and get 8 or 9 winning trades in a row. So he's doing something right. He's understanding what's going on, and nice trading. And thanks for sharing, because I know other people, it's helpful for them to see that people are having success. So, was there anything else I want to talk about today? We're 30 something minutes into this. I hate to make them too long. Some people like me to go into this more details, but other people like me to move through them quick and easy. So I try to appease everybody, but you can't make everybody happy. So I try to keep a happy medium, really. But yeah, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.